Thank you very much, and welcome to this interim report covering the period of the 1st of January to the 30th of June 2026. I will begin with some short figures. As previously communicated, in the quarter we see a low net revenue, the second quarter of the year. Compared to last year, revenue increased by 30% to 20 million SEK, but compared to the previous quarter, we see a total decrease of 60%. This pattern is mainly the same as the corresponding quarter of last year, where we also had a seasonal downturn and a large effect from ODM white label customers balancing their stock levels. On the positive side, we are seeing improved turnover on a rolling 12 months basis by 7%. This is indicating a momentum for us moving into the heating season that we consider to be a very positive sign, leaving this low season and this quarter behind us. Sales on our own product brand, ES Energy Save, increased by 23% in the quarter, reaching 13.8 million SEK. And the ODM white label sales increased by 46% to 6.2 million SEK. Both areas decreased compared to the previous quarter, but we saw the largest decrease in the ODM white label sales segments. Cost levels are still balanced and are still also decreasing. We saw in the quarter an OpEx decrease of 7% approximately compared to last year. The low seasonal revenue in this quarter resulted in a negative EBIT of minus 13.4 million SEK. This corresponds to an EBIT margin of approximately minus 57%. We are currently now in a shift of refrigerants. So we are switching to propane across all our product lines. Worth to mention in this quarter is that even though we have low levels of sales, we do have the highest levels of sales so far in the R290 segment in our own brand, ES Energy Save sales. So this is also something indicating a momentum for us moving into the heating season.
Thank you very much, Helena. So we, as Helena also said, that we do see that both sales and demand for our own ES Energy Save branded units are growing in the market in both residential and commercial. We are also growing in our ODM white labels sales. During quarter two, we initiated a spare part partnership together with JS Energy in Sweden. This is as we are increasing our heat pump population in Sweden. We are getting prepared for a long-term collaboration when it comes to spare part distribution within the Nordic countries. We'll come back a little bit more on this later when we go through the numbers on the region part. Also on the second quarter, we changed the name of our company name from ES Energy Save Holding AB to ES Group AB. This is to clarify in part on our strategy when we go to the markets with both ES Group. We have the capabilities, competency, product platform to the ODM white label. Meanwhile, differentiate our own products brand of ES Energy Save. Actually, this enables us to be able to go to the market on the two path and more clearing our communication also toward the investors. After the end of the quarter, we secured a financing of 17.8 million gross capital to strategic investors. And with the money, we aim to continue accelerate our growth in the ODM white label segment and also the commercial business segment.
Okay, and with that summarized, we are looking in a bit more specifically on the numbers here. Net revenue and operating income here, you can see clearly the pattern is the same as the second quarter of last year. We saw an increase from low levels in net revenue by 30%, reaching 20 million SEK, and an increase in operating income by 42%, reaching 23.6 million SEK in the quarter. This is also where we can find that we have on a rolling 12 months an increase in net revenue by 7%. So this is the momentum I mentioned earlier. Looking into the business area split in the quarter, we see an increase here both on the residential property side and on the commercial property side. Residential property sales increased by 30%, reaching 17.3 million SEK in the quarter, and on the commercial property side, an increase by 36% to 2.4 million SEK in the quarter, approximately. This increase on both segments is increased sales of R290 units. So this is a very positive indication. The increase in the commercial property is actually big enough that the sales on the commercial property this quarter is approximately 50% propane units now. So that's it's a good number for looking forward.
Well, so we can also add here to this is that by end of quarter one, we formally introduced our R290 for commercial units to our distributor and to the market. So the units that we distributed over the second quarter are mainly first installations where we supported and trained our distribution network with the training programs to secure that they have confident and good startups. So with all the good things we have done the second quarter, we expect we can accelerate later on the second half of this year.
On the brand sales split, we see I mentioned on the first slide an increase on ODM white label sales by 46% in the quarter. This is from low levels. ES Energy Save, our own brand sales by 23%, reaching 13.8 million SEK in the quarter. This was also an increase on both sides to the comparison quarter, but a decrease to the previous quarter. I will move on to the geographical split of sales. Here we can see an increase on the Scandinavian market by 208%. This is also from low levels, but still a significant increase, reaching 4.8 million SEK compared to 1.6 million SEK in the comparison quarter of last year. Europe, except from Scandinavia, increased by 10%, reaching 15.2 million SEK compared to 13.9 million SEK in the comparison quarter. The increase here on the Scandinavian market has mainly two reasons. First off, we have seen an increase really throughout the year, but especially in this quarter in sales activities promoting older refrigerant units, mainly on the Swedish market. But we also see a positive increase overall to sales on the Danish market. So this is also a very positive sign in this.
What I can add on this topic is that we are increasing our population of heat pump, ES Energy Save branded heat pump in the Scandinavian market. For this reason, we do see that in order to deliver a good customer satisfaction throughout the lifetime of the heat pump, we needed to collaborate with JS Energy. So we enter alliance and partnership together with them, where they can help. They are very skilled in distributing spare parts throughout the Nordic market. So we enter an alliance partnership together with JS Energy in order to secure a future high service level to the customers to the end customer that has acquired ES Energy Save branded heat pumps.
Exactly. Heat pumps sold. We have sold 405 heat pumps in the quarter. This is to be compared with the second quarter of last year, where we sold 247 heat pumps. I think I'll be moving on from that to the OpEx slide. So the OpEx, I mentioned it on the first slide, a 7% decrease in overall costs. The split here is a decrease of other external costs by 13% from the comparison quarter, reaching 8.4 million SEK in the quarter. In the comparison quarter, OpEx, other external cost was 9.7 million SEK. Personnel expenses slightly decreased by 1%, reaching 10.4 million SEK in the quarter. All in all, OpEx for the quarter reached 18.8%. And this is a sign, we believe, both to our now stabilized cost, but that we are still having a continued cost awareness and decreasing costs where possible. Moving on to the EBIT and margins, as we expected, we have a low EBIT margin for the second quarter. This was negative by -57%, following a similar pattern as last year's second quarter, with season and ODM white label customers balancing their stock. Gross margin, also worth to look at, decreased to 25% in the quarter compared to 29% last year. This is affected a lot by the increased sales activity on the Nordic market and overall promoting older refrigerants. And with the rest of the quarter having an otherwise low revenue, the effect is larger than it would be a normal quarter. I also want to say on this slide that we do expect to improve margins moving into the heating season. Looking at the balance sheet, we notice a continued decrease here in our stock levels. This is, as in previous quarters during the year and also last year, due to a continued sales activities promoting the older stock units and with the older refrigerants. Really, we are in a shift here, moving into propane over time. So at the same time as we are promoting these older units, we are also stocking up on R290, on propane units. All in all, we do have a very healthy stock level, and we will continue this work to phase in propane products and phase out the older refrigerants. Yeah. About the cash flow, total cash flow in this quarter was -4.2 million SEK. This is to be compared to cash flow in the comparison quarter last year, -8.6 million SEK. All in all, cash decreased by 13%, and cash at the end of the quarter was 18.4 million SEK compared to 20.7 million SEK in the comparison quarter of last year. Very good. Okay, so summarizing a bit about the specific achievements and milestones that have been reached in the period. We did increase net revenue for both our own brand and the ODM white label sales, but we did that from very low levels for the quarter, and we do expect better revenue levels moving on. If you look at the rolling 12 months, you can see that net revenue has increased by 7%, which is a very good sign for us, and it's showing momentum moving into the high season and leaving this low revenue quarter behind us. Even though we did have a seasonal low net revenue, we did achieve the highest quarterly net revenue for our propane units, our R290 units, than we had before on our ES Energy Save brand, that is. And here we saw increased sales both on the residential side and on the commercial property side. On the commercial property side, of course, we haven't had an updated refrigerant in a long time. So this is a particular success on the sales side. During the quarter also, we did change the company name to ES Group, which is the name of this company now. Yibo mentioned a bit about the reasons for that before. We want to specify ES Energy Save as our own markets, own brand, and separate it from other customer brands. And during the quarter, we also started a spare part partnership with JS Energy to cover the Nordic regions and to increase aftermarket and sales availability in the Nordic markets.
All right. Look at the future, moving forward now. EU published the EU Electrification Action Plan. that proves electrification will continue to have a very high importance for the European future. It basically said that EU is being very dependent on the fossil fuels today, and EU need to build more internal resilience toward the dependency on the external factors, especially during Q2, where the very turbulent situation in the global world with the Iranian war that fueled up the different energy prices. And by the electrification plan, it addresses the importance to electrify Europe and being self-dependent to create resilience. And what is interesting here is the position of heat pump industry and ES Energy Safe's position in that industry. What the plan says is by 2030, or EU has identified three main bottlenecks when it comes to further develop the heat pump to build up the resilience. Number one is the primary initial installation and purchase cost for the heat pumps. Secondly is the running costs of heat pumps. Thirdly is the installation lack of installers. So all the three topics are being handled in the EU electrification action plan. Number one, installation costs EU is promoting, encouraging these member countries to reduce the taxes or increase subsidies for the initial purchases of deploying more heat pumps. The plan is to grow from 2.5 million heat pumps to 4 million heat pumps per year. The second one is come to running costs. It's the ratio between the gas prices toward electricity prices is going to be kept within 2.5. And what does that mean? The price of if we convert the prices into heating efficiency, so to say, one kilowatt hour of fossil fuel costs 1 unit of currency. Meanwhile, one kilowatt when it comes from electricity, 1 kilowatt hour will cost 2.5 kilowatt hour units of currency. And this means that if we add the heat pump industry's efficiency to that means when converting 4 kilo for ES Energy Safe branded heat pumps, the efficiency is the CUP value is top level at 4.0, meaning getting 4 kilowatt hour of heating will cost 2 units of currency. Getting 4 kilowatt hour of heating power in fossil fuel will cost 4. This year we have a gap of 1.5, which means that this creates the possibility for the heat pumps to be more cost efficient only, also on the running costs. And the last part is the installation bottleneck that is going to train more installers when it comes to heat pump competence. Everything will also be cleared out later when the Europeans publish the different sub-segments on this action plan. But we welcome the plan for the electrification action plan as a part of important role for the rolling out even more heat pumps to the European market and build the resilience. We also had the capital market on director share, as I said before, and we will further promote and develop our business here within white label segment as well as our commercial business segment. During second quarter, we accelerated our training programs toward the different distributors in our network and their installers. So we had a good training on them, both on the hardware and also on the digital solutions. And we're eliminating or we're mitigating the different bottlenecks of deploying more heat pumps to the market. Number one is the cost of project management, more quicker to address the different scenarios when it comes to that and the different products needed for the different heating needs. Secondly, is also that we have trained the distributors and installers with ES heat pumps to quicken the installations. By quicken the installation, we actually mean that it will go, the same installer has more time to deploy more heat pumps on the market rather than compared to the competitors. efficiency when it comes to efficient installations. And this strengthens our position in the value chain. So now as we're moving into the heating season, if the planned orders materialize, we target to approach break even for the full year of 2026.
Very good. Okay, and with that, Yibo, we will now end the presentation and move into the Q&A part of the presentation.
If you wish to ask a question, please dial pound key 5 on your telephone keypad to enter the queue. If you wish to withdraw your question, please dial pound key 6 on your telephone keypad. The next question comes from Lara M. from ABG Sundal Collier. Please go ahead.
Hi, Helena and Yibo. Just a couple of questions from me. Well, you said that you expect your margins to improve, and well, commercial is already around 50% of propane. The older refrigerant stock is basically cleared. Do you have, can you give any sort of indication of where the gross margin could land? And does the propane range carry a higher margin than the units it's replacing? Just maybe give us some flavor on that.
I think the largest variation we will see on the gross margins is between the commercial segment and the residential segment. The residential segment will likely remain similar margins to the margins that we have had historically on villa units. But on the commercial side, we can see higher margins likely. This is the historical pattern at least, and we believe that will continue. But as always, I would say the margins that we have had before, around 30%, is a reasonable level. But we are affected, of course, if there is a lot of sales within that we have direct deliveries for. That usually lowers gross margins but increased overall turnover. Therefore, it's hard to guide towards this. We will be around 30% because we will always choose higher turnover, and that might affect margins a bit, but of course contribute more to EBIT. So I hope that's enough of an answer. It's not crystal clear, but that's our aim.
Yes, thank you. That was very clear. And in your report, you guided for to reach break even for the full year. And if we just look at the first half of the year, EBIT is around minus 17 million. So that's quite a large swing into H2. Could you maybe just help us on this bridge? How much is maybe from postponed white label volume versus maybe cost improvements? And just give us some more flavor on this.
Both will contribute increased revenue and cost cuts, but mainly it will come from revenue in the heating season. So that will be the main contributor to us approaching a break even for the full year.
I think over the past 8 months, the season, we can see stronger and stronger tendencies that our traditional seasonality is coming back. And this will, of course, affect our planning. And we are seeing that with our business model, the bigger volume will come when the heating season, after the summer period where people are entering the winter. Let us remember that 2026, we started with a record low temperature, record long winter in Europe. And now when people are coming back, people need to secure their homes and facilities, upgrading those with the heat pumps. And especially now with the electrification action plans published, I think more and more, there are more and more, incentive to switching to a heat pump from traditional fossil fuels.
And this is all, you can also add that this is very true for the residential segment, right? For the commercial segment, it's very possible that we won't see that kind of tendency to increase seasonal variations, but a more even pattern on that side.
And these orders that you're expecting in the second half, can you tell us maybe how much is actually contracted versus maybe just a forecast that you're leaning on? Essentially, I'm just asking how confident are you that H2 will pick up?
I understand. Yeah, it's we expressed this in the way that it's planned orders. So we can't and we don't really comment on our order stock, and we don't comment on specific customers. But we do feel pretty confident that if the orders that we do have planned today materialize, then we will be able to approach break even for the full year.
Okay. Thank you. That was all from my end.
Great. Thank you very much, Lara.
As a reminder, if you wish to ask a question, please dial pound key 5 on your telephone keypad. The next question comes from Karl Bokvist from ABG Sundal Collier. Please go ahead.
Yes, thank you. Good morning. My first one is more of a market dynamic question. We see quite large differences in how different countries in Europe are growing when it comes to heat pump volumes. So given the fact that the last couple of years you've been both or on your own, but especially with partnerships trying to establish a presence also outside the Nordics, I'm just curious to understand a little bit how you feel positioned in key markets such as Germany now, for example, which are growing very strongly when we look at overall volumes.
Yeah, to answer that, we really need to separate the ODM white label customers, where we don't always have a full. We know which markets those customers are present in, but it's not. We can reach markets via those customers, but we don't have the full sight into their sales. But then on the ES Energy Save sales side, especially with the propane units now, we are noticing that we are entering markets that have previously been small for us or non-existing even. So sales on that side are stronger than before on the Spanish market, for instance, on the German market.
Yes.
Am I missing something?
Italian market.
On the Italian market, yes.
Increasing. So this is also partly the reason we're increasing our trainings to the customers and distributors in those countries. We do see a strong momentum, also a strong interest for our brand. But as ES and Receive, a smaller brand with limited resource, we try to focus our resources where the trainings or where we get the maximum effect. So as a new brand, new smaller brand to compete with the bigger brands, it will take us some more time or it will take us longer time compared to all the already established brands to get a present. But when we do that, we're quite confident with our unique selling points, with our digital tools, with our very good heat pumps. We're very confident that we will see to develop those markets further.
Yeah.
Understood. And also just to follow up on Laura's question before here about orders towards ODM and so on. And you briefly talked about this a little bit, Helena, now, but is there any way you can kind of keep track of their performance either through distribution channels or kind of market data that you have access, or i.e. that you have a bit of a sense at least that your customers are selling a certain number of volumes and that you will therefore be prepared for an upcoming order, for example?
Yeah, of course, we have a very close collaboration with our customers and receive a lot of information from them that we can't really forward. But we know, of course, approximately what markets they are present in. And those are also, I would say, overall, the same markets that we aim to grow in. That is Germany, the UK, and Italy also. Yeah.
And finally, just a bit of a reminder, perhaps, but when it comes to the heat pumps just to function, what we talked about now in some other cases during the summer with heat waves and so on, of course, also the European Heat Pump Association has tried to advocate for the heat pump's dual function use, that it can also use as a cooling technology. So can you just remind us how you are positioned technology-wise in the dual functionality of a heat pump?
Yeah, our heat pumps are available. We have our heat pumps are available with our portfolio for also the coolings. We have heat pump, we have fan coils, we have a competitive portfolio, and this is also where we can see an increase from, for example, the Italian market, that we are delivering more and more heat pumps to those markets.
Yeah, and that has been clear in product development for a
Yes.
long time, that it will be a dual requirement in some countries, even an actual requirement, I think, for subsidies and so.
Yes.
Yeah,
So,
it
and
is,
we are seeing an increased demand in those units, so we need to be better prepared also for the coming years to also be more communicative in this, also in the cooling modes for heat pump products.
That is clear. Thank you.
Thank you.
Thank you very much, Carl.
There are no more questions at this time, so I hand the conference back to the speakers for written questions. Any closing comments?
Thank you very much. And we do have a couple of written questions here. Let's see, to start here. Yeah, this question we have touched on, but it could be a good thing to clarify. So the question is, the report notes that second quarter revenue is low because people buy fewer heat pumps during warmer months. What are you doing to make your sales more stable during the spring and summer? And I think we mentioned this a bit regarding our different business segments, that we have had a low revenue for a while now on the commercial side, which stems a lot from product updates. We haven't shifted the refrigerant as frequently for the commercial products. So therefore, just increasing that sales side, which we aim to and now have a great possibility to do, will stabilize sales throughout the year.
Yeah, and also increasing on our commercial segments to balance that even more, because the commercial side is less volatile when it comes to seasonality.
Yeah, great. Okay, moving on. So the second question I have here is regarding the company name. The question is, so why did you change the company name from ES Energy Save Holding to ES Group? And then there is also a question, how does this help you grow or find new business partners? And obviously not the name change on its own will, but the clarification has some form of value actually in the market.
Yeah, imagine like Volvo Group. Maybe it's sounds strange when we are a small ES Energy Save or ES Group compared to Volvo Group, but I've been involved for many years where Volvo Group is the platform. They have the different truck brands. The same we're going to do with the ES Group. ES Group lays the foundation, the base for the platform. We have the same digital tools, the same product technology platform, and that product platform can be adopted, customized to different brands. And by changing the name ES Group, it helps us to go to the customers and secure the business alliances together with them to make sure that we enable our product platform for their brand, unique design, or their brand. Meanwhile, ES Energy Save has a different. We can develop ES Energy Save as a separate product brand name. We can use that product to go to the niches that it fits for ES Energy Save brand, and the communication will not be mixed. So this year we see as an enabler to accelerate our businesses even more.
Exactly. Exactly. Okay, so next question is a bit hard to answer. Can you tell us something about your order intake? And we do not comment on our order stock or on specific orders unless we have to for communicative reasons. But what we can say about that is really to repeat what we mentioned about turnover for the full year, that the planned orders that we have, if they materialize, then we will be able to approach break even for the full year of 2026. So yeah. If you don't want to add something, I will.
Oh, that's perfect fine.
Yeah. Okay, so next question here. is you just teamed up with the Endad to work on propane heat pumps for large commercial buildings. When do you expect this new tech partnership to start bringing in sales? Yeah, it's the question really. And that is the Endad collaboration was communicated after the end of this report, so the beginning of this current third quarter, this collaboration.
Yeah, we have a collaboration with the Endad where we are going to be going to a strategic partnership on virtual part, where our portfolio can be a complementary to their portfolio, and their technology can be a provider to or complement to our portfolio.
Yeah.
So we really are entering the best of the both. We expect that we are going to have some initial to further strengthen with different startup of the collaboration now in this. So we expect that we're going to have some business on mutual side on during this year and next year.
Moving on then. Yeah, some questions we have touched, but we will of course take the possibility to clarify anything. Question is, Analyze predicts the company could return to a positive operating profit in the second half of the year. And so the question is here, what needs to happen for the company to finally become profitable?
We need to further strengthen we need to further strengthen our sales capabilities. We need to be better in or even more as the market has been recovering the past 2 years. We need to be furthermore into the market and develop the business in all the three segments we're in. On the ES brand, on the residential part, on the ES brand, on the commercial part, but also very important is we success in our investment here when it comes to the ODM white label segment.
Yes, especially since we have a large volume potential in that segment.
Yes,
of course. All right. Next question is, you say that you are on track to break even for 2026. Yes, this is correct. Does this mean you don't have to raise any more money anytime soon? And this, of course, is a financing board decision. We believe that with the money we have brought in now, we will be able to launch and to kick off sales on the ODM white label sales side, and also on the commercial side for SNGC, we will believe that will be sufficient to make all the sales initiatives happen that we want to. However, we shouldn't, if there is a possibility that could kick off our sales even more, we should never exclude it. But we believe that this intake of capital will cover the plans and the sales initiatives that we wish to make during the following year.
Mm-hmm.
Yeah. Okay, so yes, next question. Do you believe that the turnover for commercial products now will get a significant increase during 2026?
Yes. We have been lacking of the R290 propane unit for until this year, and now we have introduced it to the market. It's been very good received by the market and also the installations. With our customers we talk to, they're very happy to finally they have said that we have been waiting for this for years. So now as we are ramping up the production pace of those units, we expect we are going to grow that business furtherly during 2026.
And this is also a very interesting question. It's really two questions, and it's about what will ES do to increase sales, both on our own ES brand, what will we do to increase sales on ES brand, and what will we do to find new white label customers?
We need to further develop what we are doing. Over the past 2-3 years, we have signed several new distributors in new countries, where our brand is or several new market for us. When we enter the new market, it takes some time initially. It takes most often longer. It doesn't just pop up. We have to build trust on our distribution network. We need to make sure that they want to promote our brand to their installers. We want to make sure that their installer promote our brand to the customer that's knocks on their door. And this investment, as a small brand, it takes slightly longer time than compared to a big already established brand. Where we need to fully even more focus on our unique selling point. What is ES Energy Save bringing value? We need to be better in communicating our digital values that we are all offering to the market, and all the activity will create a momentum later, like we already see starting this year. Momentum of increase sale of the ES. But I think we can do even more here on this. But we need to put into consideration of the seasonality. So we need to invest more, or we need to more active in the different training activity, commission activities, and build the trust on the first half year. And we expect the fruits to be ripen, I would say, to be ripe the second half year. On the ODM white label, we just initiated this brand change over quarter one in quarter one. So I think we're actively communicating the different shifts of the different meaning of ES brand, ES group, and also ES Energy Save. So we think that we're already on pace on that according to our plans. So I think we will with some more time, we'll see the effect of it.
Right, and you did speak a lot in the presentation also about the training program. This is a strength. This is of course the meaning of this also. Let's see now. Okay, this is a bit of a specific question regarding the capital shares issue and the full package of that, really. And the question is, what does the placement of existing shares amounting to around 4.4 million SEK mean in the capital placement that was made together with the directed shares issue that we made? And this is really this is our partner Anytime since many years are entering into the stock market in their home country, and with that they are no longer allowed to own stocks in a Swedish company, and therefore the ownership of Anytime will be phased out and has been sold then. So this is part of the full sales of shares that was made recently. The partnership, however, is not affected by this. We still have our joint venture together with the European factory, and collaboration is strong as it ever has been. So this is merely something that has to be done. So
formality for them to get stock listed in China.
Yeah, so that is the explanation of that post. Bit unclear, perhaps. Okay, we have a question about break even once again here. When you talk about break even for the year, are you talking about EBIT or net profit? And mainly we are talking about EBIT in that aspect, that we will have a possibility to approach break even for the full year of 2026. Yes, let's see here. Next question. Have you noticed a shift in consumer sentiment towards heat pumps between now and the beginning of the year? Has there been a shift in demand perhaps then during the year? I would say in some markets have developed. Some have developed strongly during the first half of the year. One good example is Denmark, right?
Yes.
Denmark. I'm not sure if I remember that figure now, but I think Denmark increased by
50% in the Danish market
in the second quarter, or in the first
second quarter.
So that is a market that we have also seen effect in our figures and sales figures. And there are other examples also, of course, of markets increasing. But we do expect to see main increases during the two second last quarters of the year. the final quarter?
I think we had a very strong first quarter this year compared to the previous year, last year, and that is partly because of the cold winter time in this year. Meanwhile, when we move to the second quarter, we are still very increasing and growing our business compared to the second quarter last year. But when the heating comes, and also when people know that there will be changed subsidy on the European level, it will tend us to more that people wait to the second half year for the heat pumps.
Right. Okay, very good. Next question also regarding the NVAD collaboration. The question is, will the two companies sell the other company's products? And I believe they will promote each other's products. Is that correct?
They will promote. We'll promote each other's products. But we can also enable that we can sell each other's products. We're open for the both. Our partnership can enable both part of collaborations.
Very good. Let's see now. Here we have a question about gross margins in the second half. How does your gross margins look in the second half of the year? Is it the same low levels as in the second quarter? And I think we spoke with Laura a bit about this. So the margins are affected by promotions in this quarter a lot. We don't expect those levels to persist during the year. And with that being said, a high level of direct deliveries, high level of increased ODM sales have a possibility to affect margins, to push margins down a bit. But then with the positive side that we will increase revenue and thereby because there is such a volume potential on that side of the sales. So therefore, we might, in a situation like that, and in a sales situation like that, we might choose promoting the higher volumes since they have a contribution to EBIT in a whole other way than a smaller business with lower gross margin, high gross margin, of course. So yeah.
What possibly is also worth to mention is, as a small brand, we're actually populating more ES branded heat pumps to the market, meaning that we need to build a presence. When we do the presence, we start with higher promotion levels in order to have people more talk about our brand, building awareness. And this we have been doing, and we expect the market is going to, when the heating season starts, we expect the margin to recover.
Absolutely. Absolutely. Okay, let's see here. A couple more questions. We are okay on time, yes. Okay, I will take a few more questions. Okay, so from the beginning of 2027, heat pumps with older refrigerants will be banned. How does this affect your sales, and how does this affect what you have in stock?
We actually see it very positive that the R290 will be the refrigerant that's upcoming. This is due to several reasons. This helps us to actually build economy of scales, concentrated on one technology platform on R290. Let's remember, ES has sold more than 10,000 R290 heat pumps in both ES and brand combined together with ODM or different customer here with the white label brand, and this builds us a very strong. This creates a very good reputation for the ES group being able to open that business forward. When it comes to older refrigerants, I think the European definition is placing those on the market, meaning importing ban by end of or start of 1st of January next year, but also produce those units for the European markets. We do see that several of our customers are still demanding for the R290 or the older refrigerant units. Meanwhile, we are increasing, as we can see from the number this year, we're increasing the R290 I think Helena said that we have a record high on the highest R290 production in the market. So we will see that there will be a shift from the older refrigerants. I think the ultimate ban for not being able to sell these will be 2030. And I believe that we have a healthy stock level, though, so we can both support the customer who still demand it, but also a good level, so we can accelerate further deployment of R290 to the new markets we're entered.
Yeah, very good. Okay, I'm going to take 2 more questions then. Okay, so approach. What does this interval mean? I believe this points to the way we phrase ourselves about the break even, that we expect to be able to approach break even for the full year of 2026, given that planned orders materialize. The question is it to have over 0 million in EBIT for the second half of the year, or being 1 to 2 million close to break even? And the reason that we are not more specific about this is that we can't see exactly how these orders will fall out exactly in time. We know roughly, and therefore we don't want to be more specific than that. That is not there has no value to anyone really. So we do think that we have the chance to reach the goal full out, but we can't be more specific than saying that we expect to approach the goal of break even. So yeah, I hope that's explanation is good enough. Okay, so this will be the last question. So the electrification action plan and the IAA seems to be promoting a European production over production in China and in Asia. And this is for the what's it called? The Europe First or something expression.
The Industrial Accelerating Act.
Yes, exactly. Yeah. That's correct. And the question is, how does this affect ES Group, since you partly produce in China?
But we actually we welcome the European initiative to with the different programs to have European production. ES has invested in European manufacturing, and this goes in line with our strategy in Europe for Europe, that we're moving production to Europe. We today already produce some of our heat pump models in Europe, and we welcome that because that shortens the planning time, that shortens the risk, that shortens the business risk, and we do believe that it will create a more agile planning and business environment for us going ahead.
Great. Okay, very good. And with that, we can thank you all for listening in. And we will see you once again in 3 months approximately, if you wish.
And thank you all for all the good questions.
Absolutely. Lots of good questions today.
Thank you.